Hey guys, how you going? Just wanted to go through how I use Bitmex. Just thought it might be a good idea and sort of how I understand it. Just noticed a few of you guys have a few questions that come up a fair bit, and yeah, just wanted to go through it a little bit. So we are on the testnet right now. Not much is different other than the colors really. But I'll start in the place order area. So first thing you notice is you'll have a quantity. The quantity is pretty much USD as it states. So one quantity equals $1. It's converted from what they call XBT instead of BTC. It's just their way of using a contract that differs from Bitcoin. So what you'll notice there is there's going to be a slight difference compared to what you usually see in your normal BTC charts. As you can see here, the chart is actually XBT USD. So don't forget when you're looking at entry and exit to use that chart. But for standard sort of trades, I usually use BTC USD. So back to the place order area. You got a buy long, sell short button. Pretty straightforward. First thing you'll notice is down here, a lot of people look at order value. I find that to be pretty confusing. And the best way for me to sort of explain this, and this is how I understand it, is whatever you're trading with, let's say it's $200, the best way to look at it is Bitmex is going to be lending you extra Bitcoin based on your leverage. So we'll go through that in a little bit further later, but as you type in different denominations up here, you'll notice a little cost area here. This is literally what you're going to be spending or what you're going to be putting up as your risk for your trade. So this is also known as margin. Margin is the margin that's used for your contract, and that's pretty much all you can lose on your trade. So that's your risk factor. So as you know, we use a amount of 10%. So if you were to do a trade right now, it'd be 0.054. So let's say we were going to be going long on BTC right now. First thing you do when you look at one of our trades is look at the leverage. Let's say the leverage was 10. Make sure your leverage is set correctly. You can change it with a custom value if you needed to do 12, for example, which isn't in the slider. Now the leverage is probably one of the most important parts of our trades. It helps us sit above or below our stop loss, and it takes into account our risk reward factor. With our trades, I really don't recommend you mess with the leverage, because Rob and myself, when we do look at a trade, we take that into account. If you use more leverage, you're going to have more risk, and it could outweigh the reward. So please stick to your set leverage that we give you. That's probably the best advice I can give you. So let's just say we had a leverage of 10. Then you would go up to your quantity area. Might put in an amount. So we need 0.054, so that's not enough. So we're close, so maybe 4,000. Nope, 3.5. Now, if you're wondering why I'm getting so finicky with the numbers here, it's very important to get exactly 10%. We have a thing called compound trading, which is pretty important. You want to get the same amount every single time. Now, what I usually do is I will get my amounts correct pre-trade, and I usually go through each one of my set amounts and go through and make sure that they're correct to 10% of my available balance. If you are in a trade, what you can do is, if we go down here and we select advanced layout, you get this window here. Now this is awesome. If you're in a trade, you can look at your margin balance, and that tells you how much BTC you've got all up, including what's in trades and things like that. So you'll see once I put a trade in, this will sort of stay the same, but obviously the available balance will go down. So you want to make sure you're always doing 10% based on what you've got in your entire wallet, because that's how we work. Okay. So once you've set that, we would give you a limit price. So I don't know. Okay, so let's say BTC's 63.60 right now. Let's say we were going long at 63.80, and you can see now the amounts change slightly. This has got to do with the calculations that Bitmex is giving us. Perfect. Okay. Right. So we're set to go. Leverage is correct. Let's put the buy long limit order in. Now, what you also want to do is always have this one ticked. It's just a fail-safe. I just leave it ticked. It just means that any order you put on, no, we don't want that ticked because we're putting in our first limit order. So we just want to hit that. Buying this amount of contracts at 63.80. Now, order value is what your cost is times the leverage. So we're going 10x right now. So our cost is our 10% of our portfolio. Our value is that times 10. So it's your cost times your leverage equals your value. This is what it's going to increase your position to once you've executed it. This is the current price right now, and this is your liquidation price. So hit buy, orders in, you can see it here, and looks like we went straight in. Awesome. Okay, so we went in at 63.60. Liquidation price was what it said it was going to be. So we got pretty lucky there. It looks like someone had an order above us that just got filled like straight away. Yeah, okay, cool. So moving on. So now you can see here, available balance has gone down. Margin balance is going up because we've got some ROE happening. Now I'm going to sort of explain each area now because we've got a trade in, so it might look easier to sort of explain. So you can see here now the position is set. One important thing to note is if you change your leverage here while you've got a position going, it will change the current position's setup. So just show you this box here. So this has our current position set up, 10x leverage, 0.581 margin. That's what we're risking. This is our profit and loss right now. If I were to change this to 25, you notice this goes up. We get given some margin back. It's gone from 0.58 down to 0.25. Available balance has gone back up, and that's purely because what's happening here is we're saying to Bitmex, hey, I want to take a little bit more of a risk. I'd like to borrow some more money or get some more leverage. So by doing that, my deposit is less. So the way you need to think about this is almost like getting a business loan. So Bitmex have said, hey, which way do you think Bitcoin's going to go? Do you think it's going to go up or down? We're going to say, yep, it's going up. We're happy to bet $3,430 on it. We want you to loan us 10x, which is going to be 0.9, because we've already got 0.1 in there, to go long. And we're going to use 90% of the trade of your money, which is this value here, to do that. Now, in doing so, Bitmex say, that's cool, no problems, we'll let you borrow the money. So that's how much the entire position is going to be, or the contract. We're going to give you 90% of it, and we're going to take 10% as a deposit. So what that means is, by doing that, if you're wrong, they need to cover their losses. That's what the liquidation price is. So you can see it's not exactly 10%. They want to make a little bit out of it. They get some from the fee, but they also want to make a little bit more. Otherwise, why would they be in business? So what happens is, when you do get your position, they're happy to go along with the contract as long as it doesn't go below the liquidation price. If it does, what happens is there's a system called the liquidation engine, which is pretty much just watching your trade to say that if it goes below a certain amount, you're going to lose your margin that you've given us, or your deposit, and we're going to take it to cover our losses. Contract will close, they'll be back in whatever position they were before, and they take your fee. Because essentially what you're doing is, by going long, you're telling Bitmex to buy BTC. By selling short, you're telling BTC to sell their BTC, and then buy it back or sell it out when the trade closes. So what we've done is, we've told them to buy 3,430 BTC at this price, and the trade's just going to run until we tell it to close. Then we get our amount back. They get their amount, and they've already taken their fee. So I'll go through each area in this open positions area. It's pretty important. So you've got your symbol, pretty straightforward. You've got your size, which just tells you how many contracts you've bought. The value of your trade, which is, like I said, the amount of your margin times whatever your leverage is. You've got where you entered, what the current price is, what your liquidation is, and then your margin. Now, the reason this is called margin and not cost is because you can move it. There's a couple of ways to sort of cover losses so you don't get to this amount here. This is why we always recommend a 10% cover, and it just means that you always have margin there to add to your amount to cover it. So let's say we were in the red here and we were getting close to our liquidation price. I could come in here and add margin, so it gives you your available amount and what you've currently got in here. So let's say we wanted to add another, 0.01. Now you'll notice right now liquidation is 5809. If we add margin, it's gone down. So this allows you to cover losses. The reason you do this is because it's temporary. You can always remove it. So let's say you had a massive blowout, but you still wanted to hold your position. You can add margin. You can continue adding margin. So we've now added 0.03. Almost doubled our amount that we're gambling with, but liquidation's gone nice and right down. That could, cover you right. So, 55.29 is very safe if you were starting to go red. So let's say then it's gone back up. We can remove that margin, tells you the amount you can remove. You can just click that, otherwise type in whatever you want. Back up we go. Liquidation price is back to 5808. You'll see me and Rob rarely do this. Reason being, it's very risky to add margin. Because if you're in the red, you're in the red for a reason. Trying to cover yourself in those situations can sometimes just lead to more loss. Our risk reward factors get to be pretty tight and set because we're swing traders. So what you'll find is we won't ever really tell you to add margin. It's very rare because you could end up just losing more, and it's not really worth it. One thing we may do is get you to move stop losses, and we only do that to do what's called bulletproofing, and that means that if you go pretty far past but you're not actually at your target yet, we might tell you to move your stop loss up to where you've entered, so it means you actually can't lose any of your margin. If it came back down and had a big blowout, it means that it'd go down to where you entered and you'd just exit with 0% loss, obviously minus any fees that you've paid. Which brings me to my next area. We're going to look at stop losses now. So we use what's called a stop market. Make sure it's selected. If you have stop limit selected, please change it to stop market. Pretty straightforward here. So you want to do the amount that you've got in your contracts. You can usually click that if we're on an amount like this, and you click it, just puts it back. Stop price is what we set it at. So let's say liquidation 5808. Let's go 5972. Then you want to make sure you got close on trigger selected, and I'll just literally read out what it says. If this is checked, this will close an order. Close orders can only reduce your position, not increase it. If the account has insufficient available balance when the close order is triggered, the other XBT USD orders will be cancelled or amended down. So let's say we set an exit price of, I don't know, 8 grand. And we also have a stop on at the same time. If we hit our stop, it will close off all fill orders, so that this is pretty much what we call a set and forget type of situation. So in this situation, it means that you're not going to have a stop order just sitting there. A fill order just sitting there if your stop goes off. So we make sure that's always ticked. Hit set sell because we're in buy mode. If you were to if you were in a short, you would hit buy stop instead of sell stop. So we'll hit that, just double check, it's the same amount. Sorry about that, guys. So your sell amount will be the amount that you've got in here. Make sure it's the same, and then the same price as what we just went through, which is 5972. Now, this is an easy one to look at, just to make sure position size after execution equals 0. And the reason we're doing a market sell is if it goes, let's say it blew straight down to 5.8, it could miss our trigger and get past it without filling any orders, which means that you'll be stuck holding your position still. You could then eventually get liquidated if it went down to the amount of 5808. So what this does is it sells it at market value, which means whatever is sitting here on the books, it'll literally just close the order on. Sometimes this can move you past what you've set for the market trigger, but it's worth it, because in those situations you probably would have got liquidated before you stopped out. So make sure you guys have stop market set. I can't really stress that enough. So once you've done that, we need to set our limit amount. This is then what's known as our exit amount in Rob's trade templates. So let's go 60. Let's go 6,750. Now we want to sell short. What that is telling us to do is everything that's in our contracts will close, and you'll see here once I click it, mark position after size execution equals 0. Now what we want to do here is have reduce only selected, and what this will do is make sure that the position is only amended down. And what that means is, let's say you accidentally had 5,000 in here. Now that would usually put you on minus 1570. Because we have reduce only, it would save you. What that would do is that would start a short of 1570 once it got to this price. And that can really screw you over, because what if it kept going up? You'll then get liquidated. So make sure this is the right amount. Reduce only set sell short. You'll notice it shows up. Right, so trades in, it's set correctly. Always double check these amounts, make sure they're correct. You'll notice down here that we've got 2 orders in here. One is our stop market, then one is our sell limit, and our open order is trucking along. From here on, usually you would just leave the trade. Rob might give an update on what to do with it. Usually we're hoping it'll go to our exit. Sometimes it might go to market. Sometimes Rob might tell us to close the trade if he thinks it's going one way or the other. Now there's a couple of things you can do in this scenario. One thing is clicking market close. As you can see, this will sell for the amount of contracts that you've put in at the market price. So what that's going to do is try and sell, purchase these down the order book for the amounts of what your contract size is. And what you can do is, before doing that, you can quickly take a look here and see. So with your profit and loss, this is based on what's called the mark price right now. The mark price drags behind BTC a little bit, and it does that to make sure that you are not liquidated from a spike or a drop, sudden drop. It doesn't work all the time, but it's it's set like that to stop more manipulation than what happens already. So what you'll notice is this ROE is based purely off this mark price, and sorry, this one here, and it can differ to what the actual ROE that you're getting on your contract at the moment is. So I can't stress enough to really just use this guy here, and I'm just going to show you how to use it quickly now. So type in your amount, type in your entry, $6360, and then type whatever price. Let's say we were going to exit right now, so 6354. The leverage is 10. So you can see here 1.91 is what it actually says, but it's actually 0.95. and that's purely because that's what the price is right now. So, you know, this is really like, let's put in our limit price of 6,750, 57% ROE. That's what's going to be your profit that you make. So this is a much better area to go off than just looking at this guy or this guy over here. This is just a good running sort of trail to say it's up or down right now. Don't ever rely on this to say that, oh, I've made 1%, I'm going to click market and yes, I've made 1%, because that's definitely not what's going to happen. Hovering over this is going to tell you exactly what you're going to make. This also calculates down the order book when you're hovering over it, as you can see there. So this is your indicative P&L if position were closed or exited a market, calculated by working up the order book. So Rob might tell you to quickly close the trade, which you can do if you were to hit market close position. If we were to do that, let's have a quick look. So market close, you can see here that's the price that we closed at, and that's the amount of contracts, and it's saying the entire order got filled. Now if you want to go back through and have a look, one thing to do as soon as you've done that is go to your stops, make sure you turn them off, because although these were close on trigger, there was no trigger for it to close off, so you need to cancel these. That one's gone, and you'll notice that because we did that, the market that got filled. Awesome. You'll notice that our amounts got turned off when we exited the entire trade. So what was I talking about? So let's see what we actually got from that trade. So if you go to fills, you can see this is everything we've looked at today. So, or maybe order history might be easier. Yeah. Fill price. Yeah. Okay, cool. So going back through this, anything that says cancelled, you can ignore. Anything that says filled is what you actually did in your trade. So now what we do is we get the calculator out. So we went long at 34.30. Sorry, we went long at 63.80. But the actual fill price was 63.60. Be confused at why that happened. Okay. Exit price was 63.58. That's the amount of contracts, and that was our leverage. Now, not taking into account fees, we actually made minus 0.32%. Now, you remember it was saying we were going to make 1%. So, as you can see, only go off this. Don't go off your ROE for actual exits, because you can't really trust it. It's going off the mark price. The mark price always lags behind, so just try to remember that. You would then pop these amounts into your sort of trade history just to track how you did. And yeah, some other tips I can probably give. Market's a big no-no, even though I do use it sometimes if I can see a quick entry. As you can see, price is 63.40, but we actually entered pretty low, 63.38. Price has just gone up again, so you can see we were 10 under. Mark price is still lagging behind, and that's why it tries to enter at where the mark price is, not the actual entry price. It'll try to enter whatever's sitting here. So if I close this again, so you can see 63.48. You oh sorry, this guy here. So 63.50.42 is what we just entered as. And if there's a big gap between these two, you're going to be entering quite high. This is why we don't recommend market entries. You can get pretty stung with them, and you know, once you open your position, you don't want to close it because you do pay a fee to do so. So try to not use it. But in those cases where, let's say, entry was, you know, 63.60 and it's down at 63.30, then we know confidently that we are going to get lower entry on a long. So, you know, in those situations you could do it. I'm still a little bit weary about it because someone could have a hidden order within here that we don't know about. If this gets removed, or, you know, let's say there's a big wall in front of it and the next one up is 10, which you don't really know about, you could end up going higher than what our entry price should be. So I would just make sure, you know, try to use limit as much as possible. Okay, so changing leverage during a trade, I wouldn't really recommend unless you're told to do so by me or Rob. And it doesn't do what you think it does. So me putting up my leverage to 25x, you can see my ROE just went up. Profit and loss will not change though. As you can see, if I change it to 10, no change. If I change it to 50, no change. If I change it to 100, sorry, the price just changed. No change, no change, no change. This has to do with margin, getting margin back, or putting more margin in, and that's purely based on what I said before, where order cost changes based on your leverage. So if we change it here, you can see it goes down, it goes down again, it goes down again. But you'll notice liquidation's actually going up at the same time. 6314, now it's going down, etc., etc. This is not recommended to touch once you're in a trade, because if you want to get some more margin back, but your liquidation's going to go way closer to your entry, it could also go ahead of our stop loss, and you're really going to shoot yourself in the foot there, because if your liquidation goes lower than the stop loss, then you could get 100% liquidated, where we were expecting to only lose 30% of a trade. You could be losing then 100%. So just make sure to leave it at whatever we set it at. We do that for a reason. Like I said, our trades are totally done around leverage, and your risk reward changes greatly once you do change your leverage. Yeah, so just a quick recap. When you're placing a limit stop, make sure you use your cost area. Try not to look at this too much, because it doesn't really have any bearing on you. It's not what you're risking, it's what you're telling Bitmex to risk. This is your most important area. Make sure this is only ticked when you're doing an exit limit. Another quick tip is you can type it in here. So let's say I put a 7600 close limit on here, and then hit close. You're saying to sell this amount of contracts at 7600. When it's executed, this will close your position. You can see here, it pops in. One thing you can do as well, which I see some guys do, is you can drag it up and down here if you really did want to. Again, we set our exits, we set our stops, so probably only do this if you were in an emergency and Rob told you to remove your limit. You can quickly click it there, rather than trying to look at your sort of active orders and get it all done quickly. You can just hit that X button and it'll close your fill for you. Apart from that, if anyone has any questions, let me know. I can make a second video just based on that. Otherwise, yeah, enjoy Bitmex, guys. Thanks.